Welcome friends, my name is Avinash Gorakshakar and I welcome all of you to another interesting episode of Konexio HighFlyers. Friends, as all of you are aware, these episodes help us understand emerging companies from emerging sectors, and we make it a point to talk to the promoters and the top managements of such companies so that all of us can understand their company's operations in a much better way. We get a lot of valuable information in terms of the company's growth journey, their business plans, their future scalability potential, and this helps investors to take a very conscious and a very proper investment call. And friends, today we got a very interesting company which is going to hit the capital markets very soon. The company's name is Nisus Finance Services Company Limited, and we have the privilege of having Mr. Amit Goenka. Amit ji, welcome to the show. And thank you very much for sparing your valuable time with us. I am quite sure that in this small interaction we'll be able to understand your company's operations in a much better manner.
Namaskar. Thank you, Avinash ji. It's a privilege and delight to be with you and to share our journey, our business with your viewers and with our friends who are watching this episode with you. So thank you again.
Yeah. Okay, Amit, the first question which I would like to ask you is that if you could explain to us in a very simple way, what is the business model of our company? Typically, I believe urban financing is one area, transaction services is the other area. If you could, share your thoughts on both these segments as to what the company does in these specific business segments. And another, related question which as a promoter and MD would like to ask you is that how did this business journey start? How did you get the idea of getting into this business? Was this a first generation effort, and how did you think of starting this business and bringing up to this level? So if you could please share your thoughts.
Thank you, Avinash ji. A very loaded question, and I'll try and do justice. First, what does Nisus Finance Services Co. do, or NiFCO, as we like to call it in short? So NiFCO is a company which is focused on developing India in the 2047 Saksham Bharat vision, which our Prime Minister has obviously vision for India as a developed economy. And to be a developed economy, in the next 5 years itself, we will have to create almost $1 trillion worth of assets. What are these assets? Of course, Government of India सड़क बना रही है, ports बना रहे हैं, airports बन रहा है, but around all of that, it has to be urban communities. Urbanization rate is growing one of the fastest in the world. Today we have close to 600 million people who are moving into urban locations. इनके लिए घर, मकान, schools, colleges, healthcare, education, offices, malls, इसके बिना शहर नहीं बन पाएंगे. 6 शहरों का देश नहीं हो सकता. It has to be a 50 city country, 100 city country. You need capital for that. That cannot just come from banks. It has to come from the private pool of money which is contributed by Indian investors and global investors. Who's going to do that? So in 2005, when the first press note 2 came, which allowed global capital to come to real estate, it was obvious to me that India's real estate and urban infrastructure landscape is going to transform radically. Global funds are now going to see it as an opportunity to invest into the fastest growing economy in the world and create absolutely high grade, huge return based infrastructure in the country. They need managers like us who understand the backdrop, who understand where people are coming from and what they want to consume, who are local residents and who are basically folks from the financial services in the space. So that's really when that thought process came. Till such time I was, as part of Ernst & Young, I was privileged to seeing some of the global FDI starting to come in and invest into India in the early days of the FDI regime. I was then privileged to also invest into real estate globally as part of a global investment house where I invested over $7 billion internationally, sitting out of Dubai, Kuwait, and other GCC markets. Even when I was part of the Aditya Birla Group, we were privy to how industrialization is also requiring the need for urban infrastructure as more factories are getting built, as more production capacity is getting built. So clearly that thought process has been in my mind from 2005. 2008, I got deep into it with a very conscious view and joined Knight Frank as one of the leaders. There my engagement with real estate started full time, where we launched funds, we created these investment products, were able to engage with the entire ecosystem of various classes of developers across asset classes and do a very huge volume of business. which increased our further engagement and understanding of the asset class, the investment opportunities, where we were not only investing ourselves through our own funds, but also bringing in global investors and domestic investors into unique opportunities and making great returns. Further down, then I set up a company called SL Finance, which obviously then accelerated that journey where we started multiple funds, we started further investing into real estate and urban infrastructure as a focused asset class. So, this entire journey, effectively spanning close to about 14 years, has really allowed me to consummate into this unique opportunity where there's a focused manager. So there are several global comparables which came to our mind when we saw them coming to India, saying we can also be something similar from India, for India, by India.
No, fine. I think Amitji very well articulated by you. Second question, Amitji, now coming to the main business, because I was seeing from your prospectus that we have got two main businesses. One is the fund and fixed asset management business and the transaction advisory services business. So if you could, tell us briefly what do these two businesses actually do, and if you could spell out, the kind of business characteristics of both these segments.
Absolutely, Anuj. So obviously, as I said, we are alternate investment managers. We pool in capital from domestic and global investors into various regulated funds. One is the SEBI Category 2 AIF fund, which currently runs about two fund schemes. And then there is a GIFT City regulated IFSCA fund, which is investing into global markets. So we concurrently run today three funds which are investing into multiple opportunities both in Indian markets as well as in other global emerging markets. So that's one of the mainstay business lines of our company, where we've got very high grade institutional investors, family offices and HNIs who'd like to invest into these hugely value accretive opportunities with us. So that's the first line. Now, corresponding to that is the transaction advisory. It is always not money that can solve the issues of urban infrastructure. They also need advice. So we help rescue some of the projects from the rigors of NCLT or from NPA situations or from banks where they're unable to get further capital from, and we recapitalize these projects. So that's a huge advisory piece. Second is we work with other financial institutions, including NBFCs, ARCs, other funds who like to co-invest with us and create a larger basket of opportunities where our capital and their capital can coexist and go to solve a bigger opportunity over the short period of time. So that's a great syndication idea. Third, a lot of these infrastructure or development companies have excessive assets. They're asset rich, cash poor. They need to be able to divest some non-core assets. So we will help them sell some land, enter into joint venture, joint development. So we're effectively helping our investee companies as a service, apart from putting a capital as part of asset management, to solve their A, monetization issues, B, growth aspirations, and C, create them as part of a certain league table into the manner in which they would like to form their businesses. So it's a very cohesive business environment where we're able to work with our investee companies, including some companies who may not need our capital but just need advice. They've come for capital, but they're saying, well, can I get better opportunities outside of your capital? We understand that you know our business better because you've done your due diligence on our company.
Okay. Amiji, now just a very elementary question for both these businesses, fund management as well as the transaction advisory services. Can I take it as a right answer that this is a largely fee-driven business? You get compensated by fees, and so your income is more or less stabilized across all the 4 quarters.
Income is a direct function of our AUM. The larger the AUM, the larger the fixed fee. The fee directly comes from the return, so there are no receivable issues, there are no delinquency on receivables, there are no receivable aging issues involved. Whatever money we invest, it generates a significant annuity. From that annuity, we collect our fees, and therefore that becomes a significant portion. Likewise, even when we're advising our investee companies, we help them monetize the assets, including assets which are part of a security pool. The liquidity of that comes into our escrow accounts. We're able to deduct our fees and help the equity holders release their capital back. So it's very, very interlinked, very predictable, and a very significant direct correlation with our AUM.
Okay. Now, just to get a understanding about how big is the AUM, if you could give us a profile as on date, what's the size of the AUM you manage, and typically what are the kind of investors from where you source these funds, and typically what's the normal kind of timeline where you take this money from, let's say, potential investors and then deploy them into profitable assets. So if you could give us some inputs on this aspect, please.
Certainly. First of all, it is a business which has the ability to get global capital, right? Because it's SEBI and IFSC registered. So our investors include some of the largest family offices, treasuries, NBFCs, ultra high net worth individuals, to those who have founders who've sold their businesses and are sitting on liquidity. So they are largely institutional to semi-institutional grade of investors, who are very sophisticated in nature, who understand multiple asset classes, have been with us for a very long period of time from fund to funds, and have constantly re-upped their commitments every fund because of the performance of these funds. Today, apart from that, we have co-investors which include larger NBFCs, asset reconstruction companies, global funds, other domestic funds like Swami, who have all become part of our investment ecosystem. In top of that, today our global funds are attracting institutional investors. So likely to see some of the global banks join us. We're likely to see some of the largest global fund of funds today who are willing to or looking to join us. We're looking at some of the largest global family offices and sovereign wealth funds and multilateral funds who are looking to join us. So today our pool of potential investors is expanding in a very big way globally, given that we know how to handle institutional capital. In terms of fund life, the first fund started in 2014, ended in 2019-20. The second fund was launched in 2020. We're exiting that in 24-25. The next fund started in 2023. We'll exit in 27-28. So typically, if you see, a fund life is between 4 to 5 years, door to door, from the time we take the first money to the time we return the last amount of capital with returns. So it's effectively 4 to 5 years. So it's a very highly efficient cash churn model where we're constantly generating returns, distributing it. We're constantly reinvesting the principal or the money which has come back, and creating a large multiple on investment apart from IRR for our investors.
Okay.
The global fund is doing the same thing.
Okay. Now, as far as the opportunity in the real estate markets is concerned, I believe I was reading some inputs from your prospectus and offer document. You all have got a large exposure in the UAE as well as the domestic real estate market. Now, if you could tell us, what is the kind of opportunity you see there over the next, say, 3 to 4 years? If you could please share your thoughts.
So from an India standpoint, today we're looking to, the current fund is looking to invest about 1400 crore rupees from the SEBI IF, as well as from the Mauritius pooling structure, for which we are raising capital also to create those structures in Dubai, Gift City and Mauritius, so that we can bring in global capital to co-invest along with our 1400 crores of domestic capital. So 1600 plus 1400, roughly about 3000 crores is what we're looking to invest from an opportunity set of over $15 billion, right? So today we're looking at over 1 lakh crore rupees, which is required to be lent or invested into urban infrastructure space. Of that, we're looking to only invest about 3000 crores. So very, very selective investment as compared to the opportunity set. As far as the UAE is concerned, again, we have close to about $10 billion of assets available, which are ready, rent yielding and high grade assets, which we're looking to purchase only about $1 billion worth of assets. So again, it's only 10% of the opportunity set. Again, why 10% is possible? Because we're one of the few institutional or potentially the very, very limited institutional investors who's actually targeting grade A, fully tenanted assets, which have otherwise been only held in family offices and private investors and never as an institutional platform.
Okay. Aminji, now a very elementary question, like when you select a new project where you want to put your money, the company's money, what are the basic elementary operating metrics which you see that the project is going to be viable, it's going to make a decent amount of yield for you. So if you could tell us basically what exactly are the broad parameters when you actually identify a new project before you deploy the money.
Again, it's a very long process, honestly. It takes us about 3 to 6 months for us to be able to convince ourselves that this is the right opportunity for our investors' capital and our own capital. I'm one of the largest investors in the fund, and my entire wealth effectively sits in Nisus Finance. 95% of my wealth sits in Nisus Finance and the funds. So we have to be very, very careful about what we do. So it includes the counterparty. Who are we dealing with? We have to be very strong, very credible counterparties who are effectively taking our capital. Second, the opportunity itself. Are we looking at the right micro market, the right location, the right development? What is the consumption behind it? What are the cash flows that are going to come from that? Because finally, it's a cash flow business. It's not about creating a Taj Mahal and saying, the Taj Mahal is valued at so much, but you have to finally only get 10 rupees per day from from a visitor. You're not going to get any return on investment, right? So it has to be very, very monetizable with very predictable cash flows over the next 6 to 8 quarters. Third, of course, it has to have a very strong track record of having developed, built, sold with very good referrals from existing banks, existing customers, existing brokers, stakeholders, and consumers. So it is a multi-level process which includes legal, corporate, financial, technical, social, other due diligences, apart from ensuring that the money is secured significantly. So if you're investing 100 crores, can I see 300, 400 crores worth of profits in this company? So we're significantly covered on cash. So even in the worst case scenario, there is no capital or returns erosion under any circumstances.
Okay, so basically a very strong due diligence process is carried out, which is quite commendable. Now tell me one thing, in our business, what's the kind of competitive landscape? Like, do you find that this is a very big crowded space, or there are only select players who have actually created a niche? So I mean, how do you position yourself in the domestic market and the overseas market as far as your business verticals are concerned?
So domestically, honestly, Avinashji, till 2021, it was a very crowded space, and which is why our AUM was also small. Every NBFC was trying to do the same thing. Every small fund manager was trying to do the same thing. Every person who came from international markets was trying to do the same thing, and there was a lot of noise, because of which you also saw huge failures. People overlent, overinvested, lost their money, and went home, and the markets consolidated post COVID. So that is today why somebody like us who's been consistent, delivering returns, returning capital back, doing funds after funds with perfect performance, has today surfaced as one of the top players in the market. And which is why you'll see a very significant growth in our AUM, almost 2.5 times, 3 times growth over the last 12 months. So our peer set really today consists of very few players which have stayed the course, but are very large financial institutions who put very large amounts of money for a significantly longer period of time, because they're looking at making larger multiples over a period of 7 to 10 years. Could be the HDFC, could be the Kotak, who are effectively doing large scale investments. We're doing smaller ticket investments for shorter periods of time, for quick bursts of energy and quick returns. So to that extent, it's not a direct comparable, but similar space. Then there are players like Motilal Oswal and a few others who are also investing, but again, slightly different strategies, more longish, more equity linked sometimes. So there are about these two, three, four players effectively in the market space who are today creating the entire ecosystem for private credit for the urban infrastructure space. Apart from that, when it comes to the large check sizes, then there are the global players who effectively now today are working with us, whether it's the Varde, whether it's the Apollo, whether it's the Oak Tree, whether it's Cerebris, and several others now, Bain Capital. There are several other large global funds which are now today joining the space because of the opportunity set that has created in a very well governed environment, which we are beneficiaries of, because as a domestic manager, we understand this backwards. They're investing now. We have been investing for 15, 16 years. So we understand the landscape. So today we're looking at collaborating with them. So to be honest, there's no competition. There are collaborators. If I want to do a 600 crore investment, I have these people who are more than happy to join us, because they have to put out 3, 400 crores per deal. I don't. I keep my money very tight, very short, quick returns, small ticket sizes. So these are all collaborative environments and opportunities, honestly, for us. So really, honestly, the answer is we have no competition. We have only friends, peers, and people who are collaborators with us.
So I think very nice to hear that, Amitji. Amitji, now tell me one thing, like, we broadly know what are the financials of the company, but, in your own assessment, as you said, your niche has been on the small ticket kind of proposals. How do you add value to your business by looking at these small ticket proposals? In terms of qualitative aspects, if you could spell out 2, 3 points for us, which could help us understand the profile and the fabric of our company, and, the thought process which goes beyond.
See, today India needs capital for growth. Where is that capital coming from? Okay, it's going to come from fund houses like us. Today, there was a report by CRISIL last year which says that AIF industry is going to grow at almost 1.5 times faster than the mutual fund industry potentially, and we will reach 40 lakh crore rupees of AUM, similar to the mutual fund industry, from today's about 12 lakh crore rupees or 13 lakh crore rupees. That's how fast AIF industry is going. That's how fast people are entering into an AIF structure. So that's the benefit that we have, right? Because as an AIF fund, today we have the largest global funds, the largest investors in India saying, can I partner with you? Can I invest with you? Okay, I like the strategy, I like the returns you're making, I like the structured way in which you work and you protect capital. So that's the fabric of the company, is finding the best, most sophisticated people who love the opportunity, understand the impact of urban infrastructure in India, and are willing to put large amounts of capital with us so that we can efficiently deploy it. As far as deployment, how many companies in India can take 1,000 crore rupees and return that with meaningful returns? Very few. So India is still an SME market. It is still a mid-cap market. It is still a market which comprises of young entrepreneurs, of young dynamic people who are looking to develop assets in the country. That is where the capital will go. There will be a few dozen people who can take maybe 100, 200, 300, 500 million dollars. But they have global capital directly available to them. The support that we provide as a financial institution is really to the mid corporates, is really to those who are looking to grow at 50, 60, 70% a year, because they're really aspirational. They have the skills, they have the talent, they have the ability, they have the assets available. They want to develop it, they want to operate it, they want to grow, they want to build new malls, they want to build shopping centers, they want to build small affordable housing complexes, they want to build co-working spaces in places like Nagpur and Nasik and Vizag for for the startups. And so that's really where our capital goes. They're strong people, good track record, need growth capital, need that availability of support to be able to build, operate, and own and develop very grade A assets for the country. So that's really the fabric. Is supporting Bharat, supporting the growth of Bharat, the creation of Bharat, which has to be built on infrastructure, on urban infrastructure. If you don't have schools, colleges, malls, homes, where is Bharat going to reside? Right? So that's the fabric.
No, I think very nicely articulated, Amitji. So I think I can very well say that you're going to bet. You're basically betting on the leaders of tomorrow.
Absolutely,
in a very small
we're
way.
betting on 2047.
Okay.
We are betting on India being the largest economy in the world. We are betting on the Indian prowess to be a leader in every space. And coming from India, we don't have to go to the US or UK to be leaders. Leaders are emerging from here. They are emerging. Today, startups are in Goa. They're not only in Bangalore. They're in Raipur. They're in Noida. You need infrastructure for that.
Yeah.
Somebody has to capitalize it. Somebody has to support it. That is why we are growing at 100%, 120%, 130% a year.
Okay.
And it has started post-COVID.
Okay. Amitji, now something on the financials. We saw a very strong number in FY24, almost 31 crores of revenue, 17 crores of PAT. Now, if you compare it to the last year, I think it has been a substantial increase. Now, specifically, what exactly did happen in FY24 which led to such a big jump both on the revenue and profits? If you could share your inputs.
Oh, certainly. So, see, we've been very conservative. Where does our money come from? From how much money we invest? We've invested 300 crores, 350 crores, 400 crores as peak investments. We invested 500, returned back 200, left with 300 crores. So we're churning our cash. We are very conservative. We built our infrastructure, our teams to manage 8,000 crores. We built the capabilities, 25 people, 30 people, managing 300 crores. Two people manage 300 crores. But we never did that. We said, let us build a strong team so that when the opportunity arises, we can manage 10,000 crores in the same way we manage 300 crores or we are managing 1,000 crores. So our corporate overheads are very high. But the corporate overheads are now flat. We don't need to double it to make our AUM 5 times. That's the beauty, because we have entire competency in-house. So when the markets were in froth, NBFCs were coming in, foreign funds were coming in, everybody was starting to open an AIF, we stayed quiet. We said, okay, let's only do the investments that we are able to get the money back in time. Now with NBFCs going away, now with funds going away, now with people saying, boss, I don't understand this, I thought it's easy, I can make 30% returns without making effort, they've all gone home or they've lost their shirt. People who understood it, who've been absolutely on the ball, who kept their eye on the mark, have been able to grow up like us. So today, that is why we went from 400 crores to 1,021 crores. That is obviously, when you triple your AUM, you've obviously more than tripled your revenues. Correct. Both on advisory as well as on fees. Okay. We were already doubling it this year. If you look at so March 24, we're already at 42 crore rupees of revenue and almost at 23, over the 23 crores of profit. We're doubling that. If you see the Q1 and H1 results that will come out, we're almost doubling. So everything is now doubling or tripling for us. Because today we become the gravity of the market when it comes to this strategy.
Okay. Now, I was just coming to the point that your advisory services income for FY24 has topped almost 22 crores, which was just about 2.5 crores. So I now get the point, as you rightly mentioned, your AUM has increased. So obviously, revenues from advisory services have increased. Now, just wanted to understand within this advisory services, Amitji, if you could give us some broad breakup from where this advisory service income has come in to get a better granular approach as to what has contributed to this amount.
See, advisory is a solution finding business. A developer from Bangalore comes and says, "Saab, मेरे को ये project चालू करने का है, but I'm stuck with this bank who can't lend." What do? Do you just give him money? Or you say, no, let's find a solution for you. Let us partner you, not just for this project, but 3 other projects with the largest developer of Bangalore. And now let's do a 4 project portfolio. And we'll fund all 4 projects, but you partner with him. Okay. Your money is secured, your cost of capital will be lower, you will be able to get your money back faster. So we're now syndicating a solution for that guy. And we're bringing the biggest guy in that town to partner. That's a huge fee. Everybody is benefiting. The larger developer gets 4 new projects with my money and 4 land banks. This guy doesn't have to stress about going from project to project for financing. So we've got no new capital. We have now syndicated. I put 70 crores. I've got 4 other institutions to join me for the next 80 crores. Got a 150 crore investment, 4 projects as opposed to 20-30 crores in one deal. We've got the largest developer come who's paid me a fee. The landowner has paid me a fee. The syndication guy has paid me a fee. So today, by putting 70 crores, I've earned 7 crore rupees of fees, boss. 10% advisory fee.
Okay.
My AUM fee is 2%. So that is why you see that ratio of 1:4 between advisory fee and AUM fee.
Okay. No, understood. I think now the point is very clear. Most importantly, now let's come to the most important question for the interview, Amitji, is that I believe the company plans to go public soon. So if you could give us a broad idea that what is the kind of capital raising you're planning to do in the near term, and what is this money going to be used for? What is the broader objective of raising this money from the markets?
So, Avinash, my peers, who are now setting up alternative funds, have largely gone the private equity route, and recently one of the largest comparable alternate managers was acquired by Blackstone. So one route was, yeah, give my company to another fund manager. I said, yeah, let's share it with the Indian public, yeah, let's all enjoy this benefit because we have to grow. So why do we need money for growth? We'll have to take licenses in GIFT City, in SEBI. We have to obviously get licenses in Dubai, DIFC, to get global capital from Dubai, in Mauritius. So this is very expensive today because today you need to create substance wherever you got a license. You need people, you need infrastructure, data security, KYC, ML. You need the entire infrastructure wherever you go and get license. So when we're raising that kind of money and we're looking to become a $1 billion AUM company in the next 3 to 4 years, you'll need that infrastructure today. You'll need the distribution capabilities. When you have the largest distributors bringing the best investors, you're going to charge a fee. That's my capex. That's what I'm investing, because then these investors are going to stay with me for the rest of their lives. So this is the investment in infrastructure. So what is our infrastructure? What is our capex? People, processes, systems, licenses, offices, and distribution. The collection of investors that comes and stays with us forever. So that's what we are investing into, so that we create an infrastructure which can manage not just 1 billion, but maybe multiples of that with the same amount of investment that we're making with the investments that we're bringing in through the public issue.
So, Amitji, please correct me if I'm wrong. Since we operate in an asset-light business, so can we assume that over the next, say, 2 to 3 years, without putting a number, can we expect a better return on equity on the overall, assets deployed? Like, typically ROE is a very important number when you talk about capital markets. Most investors look at this number. And most importantly, can we expect that, as you rightly said, you got people who can manage a lot of funds, despite being small in size as of now. So can we expect a decent amount of operating leverage also to kick in as your AUM grows? You could possibly see better revenue numbers, better profitability numbers. If you could, share some thoughts on this.
So as I mentioned, our operating leverage is fixed, right? So because it's fixed, therefore the need for further overheads and costs is very minimalistic.
Yeah.
As I said, we've already created a 35 plus member team across Mumbai, GIFT City, Dubai, and potentially Mauritius, and a few heads will maybe get added, but we've capitalized our human resources enough to prepare ourselves to manage over $1 billion already, right? and we're still not going to get there till the next 3 or 4 years. So because we have the capability to handle that, the need for additional deployment of costs is really not necessary. So the cost base is more or less fixed. So however the revenue goes, it's all going to effectively, the balance is going to flow to the bottom line. There's no leverage as far as our books are concerned. Second of all, in terms of what is it that is required to be able to do it, so this asset light model is correct when it looks to the expenses only being operating expenses. So what is going into a balance sheet is really the licenses. The licenses are perpetual, which I'm going to obviously amortize over 5 years or whatever over the first fund, but the license is perpetual. I can manage these funds now. When I have a GIFT City license and I have 2 GIFT City license, I'm the first guy to actually, one of the first people to actually send money of Indian investors into international markets to get into fixed income properties. So likewise, we have very unique and differentiated strategies. We're one of the few special situations funds in India which are able to solve for stuck assets in a very beautiful way. So the unique value proposition we bring is obviously attracting huge capital, which needs the infrastructure to bring in the capital. They need proper licenses. So our capex is that, but their opex is going to be pretty much flat. So all the revenues, as the AUM doubles every year, the AUM is all going to flow into profits, which are whole hitting the bottom line. Yeah. Today, 5 to 94% ROE for the last 3 years. We're going to do better than that. We can't do worse than that. Correct. Because we're growing.
Understood. I think very well articulated. Now, one aspect about the employee side, I was just seeing from your prospectus and offer document data is that in the last 4 years, the employee numbers have more or less remained constant, 18 to 24 people. So, typically Amitji in this business, as you will also appreciate and agree that, employees are the most important assets in our business. So, how do you manage to retain them? How do you motivate them? How do you ensure that they stay with us? Because, that's going to be the key for your future growth.
So I think there is for every employee, there is a financial and the non-financial attraction. Not everybody is only working for money, right? They want to work for pride. They want to work for engagement. They want to work to create history or legacy for themselves in some way possible. That is what Nisus Finance is doing first. We're not trying to compete on CTC. There's no end to that. But what we're competing is providing the best experience, the best knowledge, and the best products and engagement that is possible for them across the nation. Because our solutions, our products are so unique. When a manager today looks at a deal, he doesn't say, this is my checkbox, am I meeting the checkbox? Okay, let's invest, oh yeah, come. No. He looks beyond that and says, what can I do for this guy who came to my office? What is this problem statement, what can I solve for? We're not behaving like a typical fund house. So we're asking our people to learn everything. Technical, legal, financial, credit, marketing, everything. Everybody knows everything today. You ask a person what is Maharashtra DCR, he'll tell you. Next you ask him what is IBC Section 7, he'll also tell the same guy will give you the same answer. That is the engagement. So when you have that kind of knowledge domain being built with every person in the team, that keeps the loyalty and the stickiness very high. Plus, of course, this is a people's company. Share of profit, share of carry, share of fees. Their investments into the fund which is made by me and the company which comes back as carry. Now of course as a public company, share of ESOPs. Obviously this is a company for the people. The money is not for me. The company is for the stakeholders. Wealth creation is for the stakeholders. It's the employees. It's the markets. It's not for me. It's for them.
No, finally, I think it's very good to hear that, Amitji, because finally, the foundation of any company is a very well satisfied and a very talented employee base. Last question now, Amitji, since now COVID is out and we are into normal kind of business times, in our business, what is the single most risk according to you, and what is that risk which you have managed so well optimally up till now?
See, I think the risk is what people perceive as India risk, which is the regulatory flux. Because we're all regulated entities, right? We run the SEBI licenses, we run IFSC licenses in GIFT City, we run RBI, NBFC licenses. So we're a regulated business. So we have to be compliant with all the capital market laws, with all the banking laws, with all the Company Act laws, with all the securities laws. Now, any change in regulation, and of course taxation, because obviously we need to show what is the post-tax return to investors. So any flux in regulations creates a disruption. Fortunately, so far, regulatory changes has benefited us. RERA benefited us, IBC benefited us, GST benefited us. So far, gift city regulations have benefited us. So far, all the changes in the last 7 years have been hugely beneficial for us. But any negative or reversal in that can be a risk factor because nobody likes uncertainty.
Exactly.
So we're hoping to not have uncertainty on the regulatory side. Otherwise, if I don't see any challenge for India growth, for development, for capital, or ability for people to invest in India. I don't think those are our challenges.
So basically, please correct me if I'm wrong, Amiji. It means the runway for growth is very, very solid. If you leave alone these, regulatory issues, the business environment is going to be very, very strong for the next, say, 3 to 5 years. So you are pretty
Absolutely.
confident that this kind of solid growth can continue even in future.
Without a doubt, we're very conservative people. I put my entire family wealth in this, so I can't risk it. We're in the public markets today only because, for me, that's money joining my family money, and I have to protect it with the same passion that I've done for my family money. So unless I see a 10x, 20x growth, which is absolutely clear without any road bumps, there's no point of actually trying to expand at that speed. So clearly the opportunity is there, the runway is there. It's a green light for a huge red carpet for us to take as much of road as we can in as little time as we can. So we're excited, and with the capital market or the public issue, we think we're poised to become the largest and the most revered asset manager and transaction advisory company that India has produced over the last 60 years.
I think very nicely mentioned by you, Amitji. It was a pleasure talking to you, and I think all our investors would obviously benefit, from this interview. So, Amitji, thank you very much once again.
Thank you.
Accept my best wishes to you, your entire management team.
Thank you so much.
And for your forthcoming public issue, also please accept my best wishes.
I much appreciate it. Thank you.